Welcome back to the Paperstac Podcast. My name is Rick Allen. This is Brett Burky. It's been a long time. A lot of stuff going on, man.
Two conferences,
2 hurricanes, and
that's why we haven't had one out for a little bit of time. So it's kind of hard to get down to the office when there's trees in the road. So
we're marked safe from the hurricane.
Did they have that?
Yeah, they always say, but marked myself safe from the hurricane. It was, man, we've been in Dallas for back-to-back conferences. We were there for an entire week. The 5-star event, the first time at that event, which was really, it was a pretty good event. I was shocked. It was kind of I don't want to say a long shot, but it was just like, hey, this wasn't going to be our standard audience on who we would meet there. But we actually met a bunch of people who watched this podcast that were there.
Oh yeah, that's right.
That was interesting. Met with some really big players in the game, and so it was good. And then we went from there to the Land Scaling Summit, which was fantastic also.
Yeah, that was good. I learned a lot.
Learned a lot about the land business and why we're seeing such an increase in people doing the land. There is a lot to learn, and maybe we'll dive into some topics, and we're certainly going to have some people from that space.
Yeah, probably interview some of the people that we met there.
So it was really good. Other than that, then there was the hurricanes. I was in Dallas for the hurricanes. So was Brett, the first one.
Oh yeah,
Helene, which was just, man, my heart goes out to anybody who's lost anything from that hurricane, and certainly Hurricane Milton. Both of them are going to prove to be really destructive, and just what happened in North Carolina is just crazy. But
right, sad.
Yeah, it is. But hey, you know what? We woke up on this side of the earth today, and so we're gonna jump into a podcast today.
Yeah, so
maybe a couple of them. We'll record a couple of them today.
Today I want to talk about some things that new note investors would want to know. It's kind of one of those things when you're trying to develop a new strategy with anything, it still kind of might be wishy-washy on what's the day-to-day operations look like. Things that later, as a note investor, that experienced note investor, it's the habits that you just have over time to finding good deals. And it's like, what are the habits? I mean, things from, there's all kinds of different habits, but and every different discipline. But I mean, I remember this topic with Martin Sines about how he always had 3 in this.
He's got 3 to replace 1, 3 to replace 1.
Yeah, and so he was constant. That was his habit. That was his thing. That was his daily thing that he would want to do. So I think it's good for new note investors, especially, to learn what are some habits that they should work into their lifestyle. I
think it really starts with consistency, right?
That's very true.
Being consistent, and consistency isn't being consistent on just looking for deals. It's really, there's a lot of different layers to the consistency. There's a saying, is how you do anything is how you do everything. So being consistent in your education, being consistent in your learning, what you're trying to accomplish, being consistent in reviewing deals daily, being consistent on how you're looking at your deals, the due diligence you're running. It's just developing a level of consistency throughout your business.
That makes total sense. That's funny you said that, because this morning, the book I was listening to is the 80-20 Pareto principle rule. I forget who wrote the book about the principle itself besides him, but it was just showing it's like, how they eat an elephant, and it's just consistent results every day, not just trying to get it all one time and be done. It's like just there's little things, there's 1% improvements, but
yeah, there is, and it's there's parts of the business that they're more fun than other parts, and I think the key is just to get started, right? And your brain will talk you out of doing something, and so it's like, look, 1, 2, 3, go, do it, start, and then do it for 5 minutes, and get into it. And once you get into something and start pushing through on it, if you just have that mindset of I'm going to do it, or eat a live frog first thing in the morning, just do the stuff that you necessarily don't want to do and start creating those habits of being consistent. Schedule stuff, right? Scheduling stuff is so big, and people are like, yeah, well, I use my calendar, I schedule my events, I schedule phone calls, I schedule when I have to go do things, I have my calendar events. Well, schedule time to look at deals. Right? Smart. When we went through an incubator on enterprise sales, they're like, you have to schedule like an hour a week just to focus on it. Enterprise sales, or just to focus on sales.
Right.
So this would be like, look, schedule time each day when you're going to go look for deals, when you're going to do deal hunting, and maybe it's not even scheduling it to where I'm just looking at deals. Maybe at the beginning you're scheduling like, look, what are my funnels for finding deals? Right? And so you just have to be consistent. That's the biggest key to not just this business, it's really any business, right? Losing weight, eating right, going to the gym, it's all about consistency.
Yeah. No, that makes total sense.
You got to build the habits, and to build those habits, I think it's like 21 days of consistently doing it can build it. I don't know if that
I think that's kind of been debunked. It's been a bit long. Atomic Habits by James Clear kind of went over that, and he said it's more like 90 days. But
it makes sense. 90 days of doing it. Look, I just got to go through 90 days. And so if you schedule it for 90 days, you know, maybe you're taking your Saturdays and Sundays off, but you know, Monday through Friday, or maybe you're working 7 days a week, or maybe it's just a Saturday and Sunday thing.
Well, the good part about at least Paperstac is that the deals, if you're looking for deal flow, the deals can come to you. So if you set up your safe searches correctly, you'll know when there's deals. And then just reviewing those deals and going through them, and kind of just being consistent on reviewing what's new every day. And you know, there might not be something that meets your buy box. If your buy box is rather small, so it's kind of harder to find deals. But if you have you're just looking for a performing note under $50,000, you're going to get deals every day. Being able to review those, I think that's
key.
It's almost like it's not a coach or a trainer, but at least it's telling you to look. You know, hey, here's some notes to look at.
Definitely, that is a great way to build consistency. Is just looking at the emails that if you set up a safe search. Other ones is like just not always. Paperstac's a great source of stuff. You can find deals elsewhere.
Oh yeah.
Right? So being consistent on like, look, I'm not just going to focus on this. I'm consistently going to look at other opportunities. I'm consistently going to be thinking about where else can I find deals, and just letting that, and a lot of that stuff, you know, that's shower time, right? Sitting in the shower, just thinking about, okay, what are some other opportunities? Where can I find deals? And what you'll find is, like you said, the deals will come to you. It's not just the deals will come to you through the Paperstac search, is if you're in the game, right? You gotta be in the game. I can't tell you how many good deals or how many home runs I found by just being in the game and just by looking, by turning stones over, and you're like, oh, what's this one? Why is this one on here? Perfect example is the one, you know, we've talked about this one ad nauseum, but the one I found on here that was in South Carolina, that deal had sat there forever on Paperstac, and I was just like looking. I was like, I'm gonna look for deals. I looked at that deal, I saw it, and moved on. Looked at that deal the next day. Finally, I was like, well, what's going on with this deal? I keep seeing this. Nobody's doing anything with it. You know, just started diving in on it. So being consistent, opening up other venues is a key. Also, other avenues of deal flow, which kind of goes into my next key point is networking. It's so important to network. Conferences are fantastic for networking. They're fantastic for education. You can go there, you can learn a lot, right? But Brett, I'm going to ask you this question, and you didn't know I was going to ask you this question, but I know you'll know the answer to this question. When you go to an event, right, where do you see most of the heavy hitters and players? Are they sitting in the educational? Where are they?
They're at the bar. They're
at the bar, right? I can't tell you a 5-star event, perfect thing, perfect example. I saw so many people that were downstairs, right? There was the lobby of this hotel, the Omni, and then upstairs there was a level for private meeting rooms, and the third level was where the conference was being held, the vendor area was. People make passes through there, but I went downstairs to try to find somebody that we were going to try to have a meeting with. And I couldn't find them, but there were so many people around this bar, in the lobby bar, and then in the little cocktail area right next to it. And it's like 11:30, 12 o'clock in the afternoon. I mean, they weren't all drinking. They were having coffee and just hanging out. And I'm sitting there, and there was a guy, I remember there was a guy sitting there looking around, and he looks at me, he goes, who are you? And I was like, I'm Paperstac, Rick Allen from Paperstac. He's like, well, what do you do? I go, well, this is what we do. And he goes, really? Wow. He goes, come here, I want to introduce you to my CEO. And I was looking for somebody else, but I was in the game. I was in the area. And I sat and talked to this guy, and he was like, oh my gosh, this is fantastic. This is, you know, something, we would use this, right? We had a meeting with a vendor that we thought was going to be about getting valuations, BPOs, stuff like that, and maybe some other due diligence stuff. And we started talking like, and this is what we're doing with our enterprise. We're going to have white label stuff. And they were like, white label? so we can have our own marketplace, this and that. It's all about networking. Really going down there. You're going to soak up a lot of information at the events, but really, there's people down at the events who are there who are not registered for the event. They're not going upstairs. They literally flew in, they got a hotel room to go down to the lobby and talk to people. And guess what? We've done it. We've done it. You can make so many connections down there.
Oh, yeah, no, it's
you're down there and you get invited to a dinner, right? You're like, hey, we're going to go out to dinner. You start talking to somebody. You're like, yeah. Next thing you know, you're sitting there and you're like, wow, these are the people that I really needed to talk to. Great up there. You learn a lot in the conference, and I'm not discouraging you from going to participate in the education, nor am I discouraging you from going to register for the event. There's a lot of gravitas that comes with having the name tag. People know who you are, what you do. They see your name tag, Rick Paperstac, they can look it up, whatever. But if you're not doing it, or you're just passing through, or there's an event in your area and you're like, I'm just going to go check it out, great place to go is the bar. And you can sit there, and most of I would say 90% of the people who are at the event or attending are actually registered, so you'll get to see people, their name tags and stuff like that. But then there's people there, like I said, who are not registered but are there to do business and talk, and that's really what it is. If you're going to attend an event and you're registered for it, get the list up front. What do you do? Like, right? What do you do when we register for an event?
I go make a dossier of people. I kind of go through and we looked at all the people that are going, kind of try to single out people that we want to definitely meet, because we want to get a value out of these conferences. So I will go through and look them up on LinkedIn, kind of find out a little bit about them. What's the position? What do they do? Maybe I can find some stuff on Facebook. Who are they? And then I assign them to different people. Oh, Rick, this is your guy. He plays golf and he hunts. Okay.
But we set up. You do all that so we know what it is. But we try to set up meetings to talk to them.
Yes.
Right. Or say, like, I want to talk to this person, and this is a key. You have your, 3 people a day. You're like, I want to have a meeting with these 3 people. This day, maybe it's 5 people. Honestly, 5 is a lot. That's a lot of meetings in one day, because these meetings they're engaging, high mental engagement. You have to. It takes a lot.
Well, yeah. I mean, plus we have the booth, so we have people stopping by there too. So that's why we squeezed in a couple. And the meetings we got at this last 5-star event were great. I mean, they're great meetings.
They were. So what are maybe some other networking things? If you're not going to go to a conference, if you're looking for notes, go to your local real estate investors club.
Yeah, or Bigger Pockets is a great place.
Bigger Pockets is really good.
We have a Facebook group called Buying and Selling Notes. It's owned by Paperstac, or I guess it's owned by Facebook, but the group's ran by Paperstac. So there's people in there that you can meet and talk with and stuff like that.
Yeah, it's just but going out and looking at other avenues. Where are there going to be people who are like-minded that potentially have notes? Talk to real estate agents, talk to brokers, real estate investors club. Look up if there's a note investing anything in your area, and just plug yourself into a community. And if there's not one, it's not a bad idea to start one.
Yeah, like the note investor meetups.
And note investor meetups are great, and they can start very small. It can start, hey, we're gonna, rarely do you start a meet investor note up and it shows up with 30 or 40 people.
Yeah.
Usually it's a handful of people or 3 people, and you're like, hey, let's grab coffee and talk shop a little bit. And then you can do it, we'll do it once every couple weeks or once a month, and it can build. And next thing you know, you've got something that started as pretty small and people want to come join in. People start inviting people to this. Hey, do you invest in notes? If you do, we're doing a meetup.
There's a pretty decently sized one here in Orlando until 2020, and then I don't know what happened to it.
COVID. I would guess COVID happened.
I know that's what I'm just saying.
I'm going to guess COVID. If I'm going to throw a dart at the board, it's going to land on COVID.
That might be it.
There's a good shot. But if somebody's consistent with it, you can grow it, and that consistency will bleed over into your marketing. Consistency is the base of everything we're going to talk about. The base is consistently market, consistently network, consistently look for deals. So finding good deals. We're going to move on. The next one is know how to do your research on the deals in front of you, right?
Yeah.
Because it's one thing to look for good deals, but I can promise you this. If it's easy to look at a deal and say, oh, that's a good deal, guess what? everybody else knows that's a good deal. The really savvy investors are the ones who are getting good at research. They get good at knowing the right steps of reading into the deal, putting the pieces of the puzzle together, being able to look at something and put a story with it. Okay, what's the story with this note? That's really going to make an important separation from you and other people or other investors, is being able to look at a deal that other people see as trash and saying, well, where's the value in this? You know, the biggest thing about being a note investor, predominantly notes, and real estate investors are similar, and you got to be, but you have to be good problem solvers, right?
I've seen that.
If you know how to solve a problem in notes, you can look at a problem and figure it out. Okay, I know a way around this.
Yeah, I mean, that's kind of something I learned at the Land Scaling Summit, just talking to these land investors, where this is kind of not notes, but in the same realm, right? So that is in it's called entitlements, where basically people usually, when they're trying to buy land, they'll give off like 30 cents on the dollar. So they're lowballing it, right? So the person says, I want 100,000. Well, if you're offering them 50, they're probably not going to take it. But if you can meet them at their 100 and know that you can actually parcel this up and put in an entitlement, then you can offer that value, and that's a way to see a deal that all these other land investors aren't seeing. Which I always feel like that's pretty smart. Right.
That's one thing. That's definitely understanding different exit strategies.
Very much so.
Is a way to do it. I'm kind of talking about, and that's one thing about running your due diligence and your research. I'm talking about understanding payment histories. I'm talking about understanding servicing notes. I'm talking about reading the servicing notes and being like, well, this person wanted to sign a deed in lieu, or this person is begging for a modification. Why didn't it happen? Oh, they were signed up for a mod. Oh, look, it got sold 2 weeks later. Then they're back to square one, right?
Yeah.
And that happens so much with borrowers, to where they might be in talks with doing a loan mod or signing a property over, and the property gets sold, or the note gets sold. And then they're back to square one, and then they have to do what they have to do. Well, whenever they get to the new servicer, they're like, yeah, if you want to do loss mitigation, you got to get us all this stuff. And so they're like, I just got all that stuff for the people before you.
Right.
And so it's really disheartening, where if you can look at something and say, okay, like the one in South Carolina, I looked at it and said, well, that borrower was ready to sign the house over. What happened? I said, hey, can I talk to the borrower? Yeah. Hey, why didn't you sign the house over? Well, the attorney was an asshole. I was like, okay. I'm probably going to buy this loan. Would you still be interested in doing it? You know, I can work with you. Yeah, of course. Don't put me in touch with that attorney again. Not a problem. Right? Yeah. So being able to run your research, do due diligence, and understand the story is a big piece of it in the note investing industry, because you're going to be able to identify then, hey, what's a good deal? What's not a good deal? Is that a good deal that somebody's missing? And it happens. Next thing is tracking market trends. That's a big one. Understand what's going on in the market, right?
Okay, explain.
What's the inventory? What is a good deal? Like, a good deal changes depending on market conditions, right?
Yeah.
If interest rates are really low, a 7 and 8% return is probably pretty good. If interest rates are 6%, well, that 7 and 8% is not great. Now you're like, well, I need to buy a bit of a discount to be competitive. And so that's one way to identify good deals. Is just understanding the market. Which way is the market moving? You know, and it's not just like interest rates. It's like understanding the market of where the asset's located.
Right.
Hey, is the population increasing or is it decreasing? Hey, did Amazon just say they're building a giant facility in the area? Well, that means there's going to be a lot more jobs. All of a sudden, that means values are going to go up. That means rents are going to go up.
Right.
And so, depending on your exit strategy, it allows you opportunity to buy stuff that may not be a home run deal right now, but you say, man, within 12, 24 months, this is going to be a great deal. If I'm going to buy this and go long on it, I can buy it, put a rent in there for a year. Next thing you know, I can turn around. There's going to be people needing housing. I can owner finance this to them. I can keep it as a rental. A lot of different things. But you got to know the market. Or, man, they just shut down a giant manufacturing plant in the area. that looked like a pretty good deal, but it looks like that the job rates are dropping. People are moving out of the area. Now I'm going to have something in an area where housing might not be, there's not a high demand for this. So you just got to know the market, both the financial markets, what's going on, the inventory available markets, what's available for note purchasing right now.
And I know in Florida, there's a lot of smart people that will follow. Publix has which is a grocery store, puts it up. It's on their website. Their future builds out for like 2027. So you know if Publix is going there, I mean they go there, and then all of a sudden they pop up all these other stops. And they usually predict at least 6,500 people being around that area. They're not going to build a Publix if it's not that populated. Yeah. And so with that,
what's like they don't want anybody to drive more than like 8 minutes without running into a Publix.
Yeah, they've done a good job.
Yeah,
I mean that's like even the one in Sorrento, like which is Sorrento's a town that had highway access, but there was nothing out there. And then all of a sudden I was trying to go to the Springs, and we got off, and I was like, oh look, there's a Publix. And then all of a sudden next time we went there, I was like, there's a neighborhood, there's another one popping up. And
they're usually way ahead of the curve.
They make the curve kind of. Like
they set the curve, and that's
because people need groceries. At a really expensive price.
Well, there it is. And I mean, that's what like a good friend of mine does remodels and build outs for Great Clips. And and if you go look, most time if there's a Publix there's a Great Clips, because they just go, well, I'll just go where there's a Publix. I'll just buy in that shopping center.
That, but now that I think about it, there's a Great Clips right next to our Publix. Huh.
Yeah. That's what they do. So I guess the last thing is embrace technology, use technology. Paperstac is a great way to use automation. You can keep track of deals, streamlines the process, but using technology to your advantage. You know, if it's a deal tracking system, you know, you can track your deals to a certain extent if they're on Paperstac, what you've got going, what you're looking to buy. You can heart them so that way they're saved, and you can watch them. You can watch for price drops. You can do that kind of thing. But I would definitely use all the technology that's available to you. And if you're not tracking stuff, if you're looking to track stuff that's not in Paperstac, there's, you know, Salesforce. I've heard of people using that. I've heard of people using Podio. I've heard of a lot of different options. Spreadsheets.
I've used Airtable.
Airtable is one. So there's a lot of different ways to track your deals, and if you're consistent, that comes back to consistency. Finding a good deal, it might not be a good deal now, it might be a good deal later. If you find a deal and you want to track it, if you're marketing for deals, the consistency part is key.
Yeah.
Just staying in contact, putting them in a drip file, right? Talking to them every couple weeks, every couple months, every month, every couple days, whatever it's going to be. Finding out where they are in their mindset of I need to sell this, to where, you know, if you're constantly there and you're building a relationship, you're talking to them, hey, how, you know, just want to check in, see how things are going. Hey, did you get anything from the storm? Whatever it is, just being consistent and using technology to track stuff, that's going to make a difference, because you're going to get, you know, 3 to 5% right off the rip of you find a deal and you get it, you go. The rest of the stuff, it's going to take being consistent. It's going to be consistent follow-up, consistently checking with them, because it might not be right now, but it might be right in a couple months. And if they say no now and you don't continue to follow up, you're going to miss a deal.
One interesting tip that you can learn about Paperstac is that a way to stay consistent through starting, maybe if you start transactions with different people, if you're looking for a deal and you've already looked at something on Paperstac, there's a way to get a deal that nobody else can see, and it's by expired listings. But transactions don't expire. So if you started a transaction working with a seller, and then all of a sudden, you know, things, you didn't have the money, didn't work out, something like that, you can go back to your feed and just click on each one and go and click the first link in that transaction, which will be the listing, and the listing's no longer active. You can leave a message for that seller saying, hey, you still interested in selling this note?
Right.
That way that they might not have got the offer they wanted. Now, after a while, people just need to break even. You know, so if they're like, I just need to break even on this.
Some people just need to get out. Some people are winding down a fund. They're like, oh, this was taking so long. I just need to get rid of this.
I saw someone last year get 35% yield.
Dude, we had a guy who was like, look, the guy can't find his collateral, doesn't know where it is. he was contracted. He's like, I don't know if I'm going to buy it. The guy's talking to me on the phone. I was like, I would still buy it. But if you don't buy it, I'll buy it. And the guy is like, no, I'm going to buy it. He ended up buying it, and he closed, and they're like, oh, the collateral was at the servicer.
Yeah.
And the guy got a smoke. I think he bought like a $40,000 deal for like $8,000.
What? Really?
Yeah, it was something ridiculous. And it was, and he turned around, collected payments on it, and then sold it for like 23 grand 12 months later.
Oh, I do remember that one.
And he like sent it back to me. He said, hey, thanks for getting me to buy that deal. And I'm like, yeah. But I mean, I just told the guy the truth of what I thought. I'm like, I would buy it, but it's, what's your risk?
I think he was new, so I think that's what it is.
Yeah, I think they were paying. I was like, it's a paying loan. The collateral's somewhere. Otherwise, you just get them to, modify it, do something. There's ways around it. But
I remember that. The one from last year was the guy was winding down his fund, and he even knew it. He's like, you were getting one heck of a deal, but that's when a certain servicer kind of went out, or another servicer bought him, and it was just they couldn't get anything. It was just a race against time to the deadline of.
Got to get rid of stuff. So, but being consistent on checking and tracking.
That's what he did.
That's it. If you do that, you're consistent, using the technology to your advantage, then you can do it. So, recap, consistency. That's the key. Top to bottom, networking. Find other sources. Be consistent on checking with them. Get out there. Talk to people. Go to conferences. Start a meetup group if there's not one. Go to a meetup group if there is one. Understand your research and due diligence. Know what you're doing. Know how to put the story together. Mm-hmm. Know how to look and see if this is a good deal. Know different exit strategies for particular deals. If you can only skin a cat one way, not the best. But if you can skin it multiple ways, hey, it might not be good for this particular exit strategy, but I know 2 other ones that this would work for. Mm-hmm. And that'll take a bad deal and make it into a good deal. Know your market. Know the market trends. Be consistent in looking at them, right? Always understand what's going on in the market of the assets, understand the market of the financial markets, understand what's going on with inventory. And then finally, just use the technology to your available. There's so much technology coming out weekly that can enhance what you're doing, and it can really leverage your time. And that's key, right? The more technology you can use, the less manpower you need to use. And if you set it up right, and it takes a little bit of work, but set it up right the first time, you can really leverage it and really find great deals that other people are missing out on.
I think so, yep.
So, well, that's it, man. I hope that satisfied what you were looking for out of me today.
Yeah, I could add a bunch more little things there, but a couple little gems, like you can have your start keywords inside of bigger pockets. That's the last one to do. That's your technology one.
Technology, yeah, definitely. If you can set up tags or keywords.
Or Google alerts. I do those for all different keywords. So when those hit, those are. But again, we should just have one on the technology, because I got all these little nerdy things.
Yeah, and we can do that. We can do a technology one, and I can be the one asking the questions, and you can be the expert on that, because that's really falls under your domain, and you definitely nerd out on that better than I do. That's it for this edition of the Paperstac Podcast. You may have another one coming up right after this. Same bat time, same bat channel, probably the same outfits.
Same bat t-shirts.
So we'll catch you on the next one. See ya.
See ya.